And then the last 6 years, I've been in a personal journey of going back to the fundamentals and learning sales and marketing. And the last year in particular, more of a financial bent on small business ownership. That led me into a book. I found an author called Mike Michalowicz that wrote a book called Profit First. He wrote Pumpkin Plan, Clockwork, a lot of other books. He's coming out with one in April called Fix This Next. But Profit First really shifted my mindset about how to manage cash in a business, because for 20 years I struggled to pay vendors and make payroll, and I think it's a kind of common occurrence with most businesses. Not all, but with a lot, I think, struggle at different times with just cash flow. And for 20 years, I struggled with that, trying to figure it out. And I just kept applying, really, looking back on it, I kept applying the same concepts and principles to solve my problem, thinking I'd get different results, which I think there's a definition for that. But so what I wanted to do, instead of going into, yes, insanity, instead of explain Profit First to you, I thought it'd be fun to do a simulation of it and walk you through it. I think it's more impactful if you have a little engagement and hands-on. So real quick, I'm just going to walk you through this. If you guys will look in your bags, there's an instruction card. If you will pull that out first, and then if you will pay attention. Really, the only thing, you can pull everything else out except for the white cups. There's 4 white cups. Leave those in your sack. We're going to use those in round 2. We're going to do 2 rounds. Round 1 is going to be the common business practices. Oh, I'm sorry. I think there's an extra one right there.
Great, thank you.
So we're going to do what most businesses do in round 1. And so you will find in your sacks, you have a large colored cup, either silver or blue. That's going to be our business bank account. You have a small clear cup. That's going to be your personal bank account. And then the gray cup, or the black translucent cup, is just to discard your cash into. It's as if you spend it. Your cash is your M&Ms. It's okay, silver or blue, either one. You got a silver one? Yep. So that's going to be our setup, as is with most businesses. You have your bank account, you have your personal bank account, and then we have the marketplace money that will flow into our business. And so those are your M&Ms. That was fun. I found and got dollar signs put on them. So they're actually money M&Ms. But what we're going to do is start with round 1. I'm going to walk you through 3 months of transactions that happen. So everybody, we're going to start with 20 M&Ms. So if you'll open up your Ziploc and pull out 20 M&Ms. Yes, the money, the green stuff. Count out 20 and put those in your big cup. Again, it's either a silver or a blue cup. So count out 20, and we're going to start, that's what we're starting our year off with. We're going to do first quarter, January, February, and March. And so we're just going to walk through these scenarios. So we're going to go through a typical month. You can see on your instruction card, our background is that you are a small business in an upscale part of town, and you have an additional employee that works for you, okay? So, given that information, let's start off. January 1, New Year, first of the month. What typically is due at the first of the month? Rent, okay? So in our scenario, and in this great space that you have that you're renting, it's going to cost us 6, can I do that this way? 6 M&Ms, okay? So take 6 M&Ms out of your business bank account and discard those in your black cup, okay?
Rent.
It's for rent, okay? All right. Now remind me again, how many employees do we have? That was a trick question. You have 2 employees. That's right, Denise. Why do you have 2 employees? You're an employee too. If you work in your business, in fact, I would dare to say you're probably the most important employee, because your business wouldn't function, develop, grow, do anything if you didn't work in it. And so here's the question. Would you compensate someone to work 80 hours a week in your business and not pay them, not compensate them at all? Would you not give them a vacation? Anything like that? No. You're your best employee. So that's a mind shift and kind of an axiom that I would say is not a healthy axiom that we have, is that I'm going to start this business, and if I have to sacrifice for years and not take a paycheck, then it's worth it. That is false, okay? You should pay yourself because you are your best employee. So, given that, it is payday, okay? You're going to pay yourself 3 M&Ms. So take 3 M&Ms out of your colored cup and put that in your little personal bank account. That's what you get paid, okay? So those are 3. And you've got 1 employee, they get paid 1 M&M. Discard that in your gray cup, okay? So that's a total of 4 for your payroll. And now we have a friend that comes around periodically and visits us at our office. You may know this person. Goes by the first name Murphy, second name Law, okay? Murphy's Law happens sometimes. In this case, in our business, in the month of January, we're sitting in our fancy, Bluetooth-enabled, massage-featured Herman Miller chair, and the legs break and falls out from underneath us. And so we've broken our nice office chair, okay? It normally would cost you about 6 M&Ms to replace this chair. But in our instance, in this case, we decide, well, you guys tell me, what's your bank account, business bank account looking like? How many M&Ms does it look like you have there? You should have 10, okay? So is it worth 6 M&Ms to go buy another Herman Miller chair and get you? No. So let's go to Office Depot and buy a 4 M&M chair, okay? Little bit less, but still kind of a high-end Office Depot chair.
Let's go get a box.
Okay, I like the way you're thinking. Keep that in mind. So, good news. And that's the thing. The point of this, another term for what we're doing here is bank balance accounting, okay? I don't know how many people actually go back and refer to your QuickBooks or look at your budget versus just checking your bank account when you've got to make especially a hasty decision on spending some money. But that's what we had to do with our chair scenario. So here we are. It's a habit that we're all in, but we're at the end of the month, and everybody should have 6 M&Ms left in their cup.
Lord, so everybody give me all the 6 I'll put them in my little bucket.
Oh yeah, by the way, it's on your note card. Nobody eat your M&Ms till the end of the round, Paul. Please refrain. Okay. So good news, we got through the month. We got a few M&Ms left in our bank account, but here it is. The landlord has his hand out again, which means we're going to pay 6 M&Ms again. So before we do that, wait, I got ahead of myself. Wait. Yep. All right, we did have sales that we're going to start this month off with, okay? So it's 7. Take 7 out of your Ziploc and put that in your business bank account to start the month off. Got a little ahead of myself there.
This sounds like one of my businesses.
Yeah. Yeah, it's not the sales you had hoped for. In fact, it's dare to say that was a little discouraging to you. You're a little down in the dumps, and you know you need a pick-me-up. So you decide you're going to take a weekend trip out of town to try to get some encouragement and get back on your feet to tackle the rest of the month. And it's going to cost you 5 M&Ms to take a weekend getaway, okay? So what account should these 5 M&Ms come out of?
The discard.
The discard. Nope, those are gone.
We have 3 in our personal.
You only have 3 in your personal, but how many you got in your business bank account now that you've added those 7?
We have more.
You have more. So you got 13, right?
We're going to go on a picnic. We're not going to go.
Yeah. I'm not bored. Coaching.
Well, let's just, for humor me, let's just say you're going to take your weekend getaway.
We're going to go in the backyard.
The only cash
Is your business.
The only cash is your business. So let's take 5 M&Ms out of your business bank account and discard those. Yes, you really need this weekend, okay?
Coaching weekend.
Yes. All right. So you spend 5 M&Ms to go on your weekend. You had a great weekend. You're refreshed. You're feeling much better. which we subtract 5, so what does that get us down to? 8. And here it is, the first of the month now. So now take 6 out of the remaining M&Ms you have. Take 6. You see what's coming, right? All right, discard those 6. Those go to rent. Those are out of your business for good. And it's payroll time. So at the very least, you for sure want to pay your employee, right? Looking at your bank account, we're not going to talk about what we're going to pay ourselves, but you're going to take one M&M and discard that. Okay, that's for your employee.
You got us living on M&Ms now.
All right, you only have one M&M left to pay yourself, so what do?
Pay the electric bill.
Pay the electric bill. It's ironic you say that, but your mortgage is due at home. And you were counting on those 3 M&Ms that you were going to pay yourself. So what do? How do you solve a problem like this when you have no cash in your business?
You took a vacation.
You're screwed. You did. What were you thinking? Sorry. But what do you do when you're short of cash in your business?
Lock the door.
Get a loan. Find a loan. Shut down and go crying to your mama. Yes. Sell things. You can always figure out a way to sell something else, right? It may be, yeah. eBay that thing with some duct tape on it. You can always find something to sell, some way to sell something, and generate it. In this case, we're going to sell some more stuff to get some more cash in the business so we can pay ourselves, but we're going to do it at a deep, deep discount, okay? So we're not going to make a lot of money on it or anything like that, but you end up finding a way to sell a minimum of 5 more M&Ms. So take 5 out of your Ziploc and put it back into your bank account. Okay? So immediately you need those 3 M&Ms for yourself to pay your mortgage. So take 3 back out of your cup, your big cup, and put those into your personal bank account. All right.
I don't like this game. It's too close to real life.
Yes. All right. You remember Mr. Murphy? Yeah, he took a vacation too this month, so you're good. You don't have to worry about him. All right. So we paid ourselves 3 M&Ms. We don't have any unexpected expenses this month. So what's our balance? 3. Okay. 3. You should have 3 left in your business bank account, which is your big colored cup. All right. Good news. That's the end of that month. Here we go. 3rd month is March. We're rolling into it. You had a little bit better month this month. You had 12 M&M sales. So you get to put 12 M&Ms out of your Ziploc into your big cup. All right, so we're starting off our month. Everybody knows what comes next, right? Rent. So take 6 out of your big cup and put that in your discard cup. And congratulations, you signed a new contract with a new client. The money hasn't come in yet, but you know it's secured. You've got documentation. They've signed off on it. And so you're feeling good about it. You really didn't like the position you were in with your mortgage last month. You know you've got this new client. So you feel like you deserve a pay raise as it is. So we're going to pay ourselves 4 M&Ms, okay? So take 4 out of your blue cup or your silver cup and put that in your personal bank account. And then take the 1 out for your employee and discard it. And Mr. Murphy didn't show up, so there's no additional expenses.
That's too unrealistic.
Yeah. We started with 15, I believe, right?
Yes.
So 11, so what do we got, 4 left? All right. Congratulations, we ended the quarter. You still got some money in your bank account. You survived the first 3 months of this new year. But wait a second. There's one more person that we got to take care of now that it's the end of the quarter.
Uncle Sam.
Uncle Sam, the IRS, has their hand out now. So we got to pay quarterly taxes based on, just take my word for it. I don't want to do the math, but we did 44 in sales. We had 24 M&Ms in expenses. So the tax liability we have at the end of this month is 6 M&Ms. Which again, we have a problem, don't we?
I'm gonna have to sell my other kidney.
Plasma, I hear plasma does pretty good. So, now what's ironic is you showed a profit. You ever had that happen? Your accountant tells you made money and you go to look in your bank account?
No.
Never have that happen?
Never
You have a paper profit, but not a cash profit? That happens all the time to me, so. All right, everybody get a feel for, is this somewhat realistic?
Well, besides the price of oil going down $10 a barrel today.
Yeah. Let's not talk about the stock market.
Thank you,
All right, we're going to reset. We're going to pull out. We're going to do something different. We're going to apply the profit first strategy to managing our cash. Okay. It's nothing revolutionary. It's nothing proprietary. Actually, the whole concept that Mr. Michalowicz came up with, he borrowed from old concepts. So you'll recognize some of these. What we're going to do, you're going to pull out those other 4 white cups. It's going to simulate setting up 4. No, you keep. Oh yeah, you can replenish all of your M&Ms back in your Ziploc. So let's reset like that. Put all. Yeah, you got to give that up. Round 2, you'll get to. Yep, we're going to start back over. So dump everything back into your Ziploc. Pull out your white cups. Like I say, it's going to be like setting up 4 bank accounts at your bank. You might recognize this as the envelope system, is kind of what it's based on a personal financial side. But we're going to set up these 4 bank accounts, okay? Everybody should have them labeled. You should have a profit white cup, an owner's pay cup, a taxes, and an operating expense is what OPEX is short for. Operating expense account, okay? So we're going to use these different buckets, and if you'll appreciate too, again, like the personal envelope system that's taught by Ramsey and other people, Grandma did that, you have whatever that bucket is designated as, you've got to protect that for what that is. So there's no borrowing once the money goes into these buckets from them, okay, unless it's for those purposes. That's the concept here. What I struggled with, and what I mentioned earlier in running my business is, and I love this about business, is it's not complicated concept. You're taught, and I had 2 years of accounting. I was taught that sales minus expenses is, I can do this. This is easy math, just subtraction equals profit, okay? The thing about that is it's all wrong, okay? This is completely wrong, okay? It works great if you're the government and you're trying to figure out what to tax people on. And so from a compliance standpoint, you've got to reflect financials that look like this. But to run your business, you want to just change some of these letters around. It's still a simple equation, but you want to take your profit first, okay? So not only are we going to use multiple plates, and the concept here is small plates concept. And it's just like if there's a correlation between, if you look at the size of plates we as Americans ate on in George Washington's day, and you see the size of plates what they've grown to in proportion-wise, and then you measure our waistlines in that same trajectory, then you will see that there's a correlation there to the proportions that we have. There's another thing that's known as Parkinson's law. He was actually a British naval historian that wrote a cheeky article in an economy journal about the idea that whatever we put in front of us as humans, our tendency is to consume that in its entirety. So you control what you consume by the portion that you put in front of yourself. So that's the idea of setting up these multiple accounts. The idea of switching our formula around, and instead of taking our expenses first away from our revenue, for you to always be profitable in your business, this is crazy because it makes so much sense once you see it, you make that first. It's the law of primacy. whatever you put first in your life, you do it first, okay? So if you wake up and you're going to exercise, you want to do that first in the day. They say you're more effective and you're more likely to do it than if you try to put working out at the end of the day. Same principle, same concept in your business. If you want to be profitable, you have got to put it first. And so you've got to start following this formula of sales, and then I'm going to take my profit, and then I'm going to figure out how to run my business on what's left, rather than the other way around. Because as was my case, there were a lot of times that lo and behold, I wouldn't have any profit in my business. I consumed it all. And there's also an element of a good accountants will help you figure out how to make that number look a little bit less so you're not paying as much taxes. But from a management standpoint, you definitely want to be profitable. And there's a bucket in there for us not to make our decisions based on what the government's going to take or not. I talk to a lot of business owners, and that's their disposition is, I don't want to make a profit because the government will get some of it. And that is the wrong attitude about it, okay? All right, round 2. Everybody, we're going to start with 20 M&Ms again. This time, what we're going to do, actually, wait. All right, what we're going to do here, depending on the size of business you have and the different revenue, there's Mike McAlowitz and his business, they've done a lot of research and surveyed 4,000 or 5,000 different businesses in different industries. And they have a grid of what the percentages should be that we take. But we're going to determine our percentages for these categories first. So I'm just going to tell you, in our scenario and the size business we have, we're going to take 10% profit first. And I'm going to have to work backwards. This is 50%. This is 15. So that would be 25. All right, so we're going to allocate our income based on these percentages proactively before we go to spending any money. So based on these percentages, we're going to start with 20 M&Ms. And all right, so we're going to do 10% would be 2 M&Ms. You're going to put 20 in your business bank account to begin with, okay? So go into it, and that's one of the ideas here is if you already have a business bank account and you want to go open profit first bank accounts, just open 4. You're going to actually have 5 bank accounts when it's all said and done. And so what I ended up doing when I implemented this in the business that I help manage is I just kept our business bank account. I actually made it our operating expense account, but if you have a bunch of, say, merchant credit cards going into it, you might want to keep that so you don't have to change your merchant credit cards. But your income account is that's all it's good for. So our big cups in our simulation, all they're good for, the rest of round 2 is to put money into, okay? We're never going to spend directly out of them. So if you start with 20 in your big blue cup or your silver cup, we're going to start allocating from there. So we're going to take 2 and put in our profit account first, okay? We're going to put 5 M&Ms in our owner's pay, and we're going to put 3 M&Ms in our taxes, and then whatever the balance is, which should be 10, you just dump into your operating expense account, okay? So before we start round 2, this is actually where our money is sitting, okay? And we already have it designated for where it's going to end up this month. So now we know really what we have to operate our business with for the month of January. All right, so here we go. Round 2, reset. We're starting January 1, just like we did last time. Except this time we have our different buckets. All right. What comes due at the first of the month? So that's going to come out of our OPEX account. So take 6 out of your operating expense bank account and put that in your discard. All right, let's do payroll. So it's a little tricky here. we're going to pay 1 out of our OpEx and discard that for our employee that we have. But then we're going to take 3 out of our owner's pay to move over to our clear personal bank account, okay? So you're taking 3 out of your owner's pay, owner's comp is the OC, and move that to your personal. And so far so good. Guess what? Oh, Mr. Murphy shows up again in this simulation, round 1, breaks our chair. Okay, so let's look at our operating expense account. Are we in any position to buy another Herman Miller chair? Are we in a good position to even buy an Office Depot chair?
Nope.
What was your suggestion, Paul?
Go borrow a box.
Go borrow a box. I don't know if I trust a box, but maybe if we have an exercise ball, and I hear it's really good for your core, to sit on something like that. So maybe you bring an exercise ball from home and sit on that instead of even going and buying a chair. But that's the idea there's some decision making now that you have much more visibility of what is really more discernible spending money that you have. So yeah, we're not going to buy a chair at all this month. So that's 0. All right. So what does that leave us? We still have our profit, right? What's that, 2? What do we have in our owner's comp? 2. What do we have in our taxes? 3. We didn't touch that one, did we? And what's left in our OpEx? 3. All right, so that's where you should be at the end of this month. And now let's start February. All right. We had seven sales again to start the month of February. So take 7 out of your Ziploc and put that in your big cup, your income account, blue or silver. Put 7 in there, and then let's allocate before we start our month. And so you're going to put 1 in profit. You always want to be profitable, okay? So we're kind of rounding up there, but you always want to be profitable. So put 1 in profit. You're going to put 2 in your owner's pay, 1 in tax, and 3 in your operating expense account, okay? So that's how we're going to start February. All right, last round, we needed an escape because of these miserable sales that we've had. So this round, let's say we're going to do it again, but looking at our different buckets, now where do we decide we can take 5 M&Ms from? What bank accounts do you feel like we could take our vacation or our weekend getaway from?
I thought we couldn't take out of anything.
Well, you got some in owner's comp. That's ultimately going to be your money. It's going to be your paycheck. You're right. Don't say profit. That's the one I wouldn't want you saying.
Why aren't we making this choice first?
Well, you had a bad January.
I have other expenses I have to
Yes. All right. If you want to take a vacation, you either probably need to take it out of your personal bank account, whatever you have in there, or you need to take it out of your owner's pay, because that's the only personal money you have to take a personal vacation. If you want to take one, go ahead and take that money out and discard it. If not, then if you want to sit pretty where you're at, go ahead. Do a weekend. Okay, he took one. All right. Let's move on with the month then. So you still have 6 due for rent in February. So take 6 out of your operating expense bucket. Okay. All right. And then you've got to start paying yourself. So 3 out of your owner's pay. And let's see here, that's owner's pay. And then we still need to pay our employee. So,
Not happening.
okay, we have a cash flow problem again, right? Okay, just because you have profit first doesn't mean you're still not going to have cash flow issues. Same kind of thing. What can you do? What are your decisions that you can do? You can go borrow money. You can get more sales. In this scenario, if you'll humor me, look at your personal bank account. It's looking pretty good. You can make a capital injection. You can increase the value by equity by putting one back into your, we'll just go straight to owners, or not owners comp, OPEX. So you put one back into OPEX and then you pay your employee with it, okay? From your personal bank account.
Personal bank account is empty because I just went on vacation.
Well, you got 2 in there. Yeah.
You'll regret that.
Yeah, you may regret that. Shouldn't have gone on that. I don't think anybody else took a vacation, Topher. No guilt.
Bad example.
Yeah. All right. You definitely don't ever want to borrow from your profit or tax. Those have purpose and designation. So, all right. That's it. So what are our balances? No expenses happen this month. So what are our balances in profit? Yep, 3.
Yeah, there's 3. Operating expenses, 0. Operating expenses, 0.
This is 0.
Taxes, 4.
Okay.
And owners,
Owners
0 or 1.
1. Depending on if you took your vacation or not, right? Okay. So you may have 1 in there. All right. New sales come around, same thing. We did 12 M&Ms in March. So take them out of your Ziploc and put them in your big cup, your blue or silver cup, okay? And then we will allocate. All right. So for us to allocate, you're going to put 1 into profit, 3 into owner's pay or owner's comp, 2 into taxes, and 6 into operating expense, okay? So you're looking at ways to reduce your expenses, right? You can already see where you're running a little thin every month. It just so happens that you're in an office complex and someone just moved out next door to you that has a smaller office and the landlord is willing for you to switch in the month of March to a smaller office, okay? So you're able to save some money on rent in the month of March. It's only going to cost you 4 M&Ms.
When you're under a lease, you're gonna have to bid 6, you're gonna make
You know
a
what?
smaller office.
You're not the landlord there, so. So take 6 out of your operating expense and discard, or 4, I'm sorry, and discard those. All right, now you need to pay yourself 3 and your employee 1, okay? And fortunately, no Murphy's Law shows up, so we're at the end of the month.
okay, where are you gonna get the 3? I've only got 2 left in my operating expense.
You pay
Well,
yourself out of
Owner's comp, owner's pay, owner's pay. You should have
pay yourself.
Different bucket.
You should have 3. Yep.
And then what's the next step after paying yourself 3?
Pay your employee out of your operating expense account.
Pay the employee out of operating.
Yes.